Hello students and welcome to week 3. In week 3 we're going to cover chapters 9 and 10. Chapter 9 covers short-term operating assets including cash and receivables. Chapter 9 homes in on areas of the balance sheet, specifically the area of short-term operating assets. Included in short-term operating assets are cash and receivables. Learning Goal 1 begins the chapter by discussing the elements of cash and cash equivalents. You may have heard the term cash and cash equivalent, but maybe you don't fully understand the items included as a cash equivalent. During Learning Goal 1, the differences of cash and cash equivalents under IFRS are presented, as are disclosures for the restrictions of cash and cash equivalents. Learning Goal 2 specifically addresses the initial measurement of accounts receivable, including topics such as trade and volume discounts, as well as sales discounts. You need to be able to be aware of the differences between the two types of discounts. Accountants account for sales discounts in two ways, and you need to be familiar with both. Furthering the review of accounting for accounts receivables, the authors use Learning Goal 3 to look specifically towards subsequent measurement. In the discussion of subsequent measurement, the authors address the allowance method. Because accounts receivables are reported on the balance sheet at net realizable value, you need to learn about the implementation of the allowance method and how write-offs are handled under the allowance method. Learning Goal 4 further discusses the allowance method by presenting the percentage of sales method and the aging of accounts receivable method. Both methods are acceptable under GAAP and IFRS, therefore it's up to management to implement and disclose the method that is used. Accounts receivable financing can happen in a variety of ways. Students are expected to learn the different ways that financing with accounts receivable can happen. Accounting for the different ways of financing involves a variety of circumstances for which the author of your textbook explains through Learning Goal 5. Pledging, assigning, and factoring. These are all terms that you need to become familiar with. Learning Goal 6 introduces a topic similar to accounts receivable, namely short-term notes receivable. Unlike accounts receivable, notes receivable involves the calculation of interest and the effects of the time value of money. You'll become familiar with the differences between the stated rate of interest, the market rate, interest-bearing notes, and non-interest-bearing notes, as well as discounting. And finally, in Chapter 9, Learning Goal 7 discusses the disclosures that need to take place regarding notes receivable, and the chapter closes with an analysis of the operating cycle and the implementation of internal controls relating to cash. Next, in week 3, we'll cover Chapter 10, which is on short-term operating assets, inventory. In many industries, inventory is a significant account on the balance sheet. Students need to realize that the inventory valuation method chosen by management has a significant effect on the financial statements. And just as importantly, students should be taught that changing inventory valuation methods is not only cumbersome, but it's not allowed by the IRS except for on rare occasions. If the organization requests to make a change of methods, the reason for the change must be substantiated. The two primary inventory valuations methods are the periodic and perpetual methods. Learning Goal 1 differentiates between the periodic and the perpetual inventory methods. Some unique situations have to be addressed related to inventory valuation, and Learning Goal 2 focuses on these peculiarities that are related to inventory. The areas that are introduced and analyzed include goods in transit, consigned goods, cost included in inventory, and purchase discounts. Learning Goal 3 explains the 4 inventory cost allocation methods with numerous examples that illustrate how ending inventory and cost of goods sold are calculated under each method. Some complex issues are related to inventory valuation, and Learning Goal 4 focuses on these facets of LIFO. They include LIFO reserve, the LIFO effect, and LIFO liquidation. Learning Goal 5 focuses on the lower of cost or market concept, which directly reflects the concept of conservatism. The concept of conservatism plays a critical role in accounting because accountants are taught to focus more on underestimating or underreporting assets and revenue, and the reverse for liabilities and expenses. Learning Goal 6 explains the retail method and how to calculate cost of goods sold and inventory under the retail method, whereas Learning Goal 7 explains the gross profit method of estimating inventory. Lastly, students need to be familiar with inventory disclosures, and Learning Goal 8 details the disclosure requirements for inventory. So there you have a brief overview of what you'll cover in Week 3, Chapters 9 and 10. Make sure to review the PowerPoints. They're located in the overview of your course in Week 3. And you have a discussion board to complete. The initial post is due by 11:59 on Thursday, and you are due to post responses to other students. That is due by 11:59 p.m. on Saturday. You have homework number 3 in My Accounting Lab. So take your time and read through the chapters and then begin working on the homework. Use the study plan if you need it for practice. And I'll see you in the discussion. Everybody have a great week.